In 2017, then acting President Yemi Osibanjo, who's vice president, signed into law 2 bills that hope to facilitate access to more affordable credit for Nigerians. Now, they were the Secured Transactions Immovable Assets Act, otherwise known as the Collateral Registry Act, and then the Credit Reporting Act of 2017. Now, for the purpose of today's discussion, we're focused on the Credit Reporting Act, which provides for credit information shared between credit bureaus and lenders, such as banks, as well as other institutions that provide services on credit, such as telecommunications companies and retailers. The question is, has the act had an impact? Joining us to answer this question is Dr. Tunde Popoola, who's the MD and CEO of one of the credit bureaus in Nigeria, CRC Credit Bureau. Good morning to you, sir. Thank you so much for joining us. So my first question to you, Dr. Popoola, is, has the 2017 Credit Reporting Act had an impact, and how can we measure that impact?
Good morning, viewers at home. Thank you for having me this morning. So the Credit Reporting Act of 2017 was a piece of legislation that had clear objectives. And those objectives were stated in the Act, in the introductory part of the Act. Clear 6 items were brought out in that Act. And the essence of the Act, as provided in the Act, is to facilitate and promote access to credit and enhance risk management in credit transactions. And of course, also to facilitate credit information sharing and make sure that there is legislation around the operations and things that credit bureaus do in Nigeria. So if you are going to be measuring the impact, it's good to look at what are the objectives set out by that Act. And I've just given you 2 out of the 6 objectives contained in that Act. And I'm happy to say that that piece of legislation has changed the way credit is, processed and credit is granted in Nigeria. It has also changed the access to credit, and it has improved access to credit substantially. I mean, one way to look at it is to look at it this way. Before the Act, the credit bureaus were in existence since 2009. But by the provision of the Act, we were able to tick the box to say that we have completed some of the requirements for ease of doing business. So Nigeria's ranking in the ease of doing business of getting access to credit rose significantly from being 59th position out of 189 economies in 2016 before the Act, and to 12th position in 2020 out of 190 economies in the ease of access to credit. So that was a significant improvement. The second thing to look at is that it has increased the credit penetration in Nigeria. What is credit penetration? Is that opportunity, the quantum of people, the number of people that have access to credit in an economy vis-a-vis the total population or the banking population. That has also significantly increased in Nigeria from what it was around 6-7% to about 15% now. Then the third impact is that consumer loans and access to loans for small and medium enterprises have significantly increased. There have now been the development of new loans, new products, new technology, and new tools to get access to make access to credit become easier and accessible to Nigerians, especially consumers and SMEs, since this act was enacted. And of course, it also has increased the journey towards a credit economy in Nigeria. Before, most transactions in Nigeria are cash and carry because the banking system used to lend only to the large corporates. But nowadays, you see that most of financial institutions have developed products and services, and they have even come up with what we call business models around how they can access and get credit to the SMEs in particular and consumers generally. I mean, credit reporting anywhere in any economy is towards making sure that consumers and SM and small businesses have access to credit, because the large organizations do always have access to credit anyway, with or without Credit Reporting Act. So that has been what we have seen in Nigeria. There has been significant rise in access to credit for consumer and for SMEs. And new operators in the lending space have emerged because of the opportunity presented by the presence of credit report or credit bureaus that this act has enabled. Such organizations include the fintechs, the digital lenders, the money lenders, They are all now operators and players in the economy. And so people have various sources through which they can have access to credit nowadays, as opposed to before now. It's also important to say that new technology has now been enabled. So they have been, leveraging on information that the credit bureaus have on account of this act that now enable them to profile, millions of customers every day and try to see who they can lend to and who they should not lend to. And so it has helped also in reducing, the level of non-performing loans. As of 2016, the level of non-performing loans has come down, but it came down to around 15%. Today, the level of non-performing loans, even as reported by the central bank last week, was less than 6%. And that was part of the objectives of this reporting, of this Credit Reporting Act. Finally, let me also say that the Act has placed, increased responsible borrowing by Nigerians at large. Because once you look at one of the objectives, the sixth objective is to also make sure Nigerians repay their loans as at when due. Because this act facilitated the operations of credit bureaus, it makes sure that lenders generally have access to the credit information. And so they can lend with confidence, they lend with a lot of information, they can profile all customers now, and that has enabled, and the consumers know, SMEs know that if they take a loan and they don't pay back, it becomes difficult for them to get a new loan. And this is part of what this act has been able to do. So it has stimulated responsible borrowing by consumers and by SMEs themselves.
Great stuff. Very comprehensive, Dr. Popoola. Thank you so much for that. I want to play two clips for you. One on rent. You mentioned fintechs, you mentioned technology. We discussed Isusu, a startup that Serena Williams, the U.S. Tennis player, invested in. I want you to take a listen to this first.
Ensure that people have access. People living in the bottom of the pyramid have access to financing. And of course, if they couldn't borrow, it means that they have to use something that they do on a monthly basis, as the basis for building the credit profile, right? So essentially, Isusu is using their rent payment, to ensure that yes, people that pay rent on a monthly basis can report this rental payment as part of their credit profile building, and then can have access to other financial services that is to a large extent out of their reach because they don't have a credit profile today.
How important is it for these rent payments, I guess, to be funneled through to the credit bureaus?
It's like if you're paying rent, it's like you're paying the same thing as loan repayment essentially. So if you're consistent in paying rent, right, on a monthly basis, at least that's how it works in the US, right? Not Nigeria, where you have to pay 2 years forward, right? So if you're paying your monthly rent if you're paying your rent on a monthly basis and you're not defaulting on that, it suggests a certain kind of behavior, which is the things that financiers are looking for: willingness to pay and ability to pay. You've demonstrated willingness to pay by paying your rent, and of course, ability to pay by paying it consistently, right? So those are the critical things that you want to measure, and that's what builds your credit profile. So rental payment, to a large extent, is important to building credit profile eventually.
All right, Dr. Popoola, that's rent. I also want to now play a second video and another interview on mortgages. Let's take a listen to that one as well.
Key stakeholder, which I think has been left out in the mix, is the credit bureau reporting companies. They form a very critical, they play a very critical role and important factor in the housing finance mix. There is no one cap fits all. Everybody has to work together towards the same goal and objective. Government, real estate developers, community banks, mortgage banks, commercial banks, and also the credit bureau companies. I believe that we have 3 credit bureaus operating in Nigeria at the moment. And like you rightly said, they've been working. And the central bank at some point came out with a policy that before credit is extended for home financing, you must obtain 2 reports from the 3 repositories. But you can only get what you give. Commercial banks, mortgage banks must be reporting the performance of loans to these credit bureaus. If information is not being reported to them, then there's no there wouldn't be any material for the credit bureau to translate into meaningful information.
All right, Dr. Popoola, what do you make of it as far as the rent and home ownership and the role that credit bureaus can play there?
Okay, thank you very much. You know, the interesting thing about the Credit Reporting Act and the credit reporting system in Nigeria is that it enables credit bureau to collect data from all creditors in the economy. So it's not just about commercial banks or microfinance banks. It enables everyone to submit data and use credit bureau to search for information about whoever they want to do business with. There's a whole length, Part 3, Section 7 of the Credit Reporting Act that talks about permissible purposes. And part of it is about rental payment. You know, so credit bureau report can be used and is encouraged to be used to profile, those who want to take, who want to take properties, who want to rent properties. So this is permissible in Nigeria and is ongoing in Nigeria. There are quite a lot of estate value agencies or agents that use the infrastructure. They use the service of credit bureau. They submit the data about those who are delinquent in either paying rent or paying service charges to those agencies. But we can do much more than that, and that's the next phase that we should be facing. Because, like he rightly said, we are supposed to make life easy for people to pay rent very, instrumentally, maybe every month, rather than 2 years or even 1 year that Lagos State law, stated. So if we have opportunity, it's left now for us and landlords, house owners, and mortgage institutions to fully embrace the Credit Reporting Act and join hand with us and submit data, furnish all information, and that way the information will become part and parcel of what we have in the system. Like I said, as we speak today, there are quite a lot of them that have joined the service of credit bureaus and they are using the credit bureaus. And the same way we have had, just like rent, we also have, electricity distribution companies who have also joined the credit bureau. They are submitting data to credit bureau. They are profiling customers who want to use, postpaid, prepaid services to be able to really, have access to electricity. So it's the same way for rent. And as said in the second one, which has to do with house financing, that also was spot on. The issue about credit reporting is that the credit bureau houses credit information of credit that have already been advanced. So because the Nigerian system is coming from a low credit penetration, time, when not so many people have access to credit, the data we started with was very low because all those data were not there because there were no credit reports, credit bureaus. But now that the credit bureaus are here, it's compulsory for mortgage banks to join and submit data of everyone that has borrowed in the space. So it's advancing. And what they are going to benefit or leverage on is that the information we have in the credit bureaus is not just information about mortgages or even commercial banking or microfinance banking. They are going to find information about the credit behavior of Nigerians in other spaces because those data come to us. I've mentioned electricity data consumption comes to us. Cooperative societies come to us. A lot of people take loans through cooperative, and you can know their credit profile and how whether they have the willingness or they have ability to pay through what they do with their cooperatives. And so we have quite a lot of institutions like that submit data to us, and so it makes the data too large and comprehensive.
Great stuff. Great conversation. Dr. Tunde Popoola, MD, CEO, CRC Credit Bureau. Thank you so much for joining us. Appreciate you coming on the show today.